Yeah, hello, this is Michael Douville again in Scottsdale, Arizona. It is March 2nd, 2015. I need to get my disclaimer. I am not a licensed financial advisor nor a licensed stockbroker or equities broker. I am, however, a licensed real estate broker and have been for a really long time. I do an awful lot of investment work for clients and for myself. So what I'm going to tell you today is things that I have done and have done for clients successfully. And it's not theory, it's experience. Now you can go to the library and there's just stacks and stacks and stacks of how to make money in real estate, and there's plenty of things that you can do. I'm just going to tell you what we've done. I'm going to give you some hints on how to do that. But before I do that, today the NASDAQ went over 5,000. It hasn't done that since the 2000. And I follow a little bit of John Hussman, and from a Hussman fund, he claims that the PE ratio, the cyclically adjusted one, is 27 on a normal 15. So when you start getting rich valuations in any equity market, I mean, we had that in 2005 and 2006 where we started looking at real estate going, how is this possible? You start looking in the stock market and you say, wow, this is just phenomenal. Now, if you've been in the market at all, you should have had some pretty spectacular gains. Your profits should be enormous, and either all you had to do is buy some bonds or buy some stocks, and you should have done well. So I'm going to tell you that somewhere along the line you need to take some profits. Today would be a great day. Call your broker, call your advisor, talk to your significant other, and see what you might have as an exit strategy for yourself. Personally, I think you should probably take at least a third off the market. Take your profits, take them, and ring the register, put that money. Now, where are you going to put it? For me, my asset class has done much better. I mean, in 2008, 2009, 2010, we had some incredible buys. Those are all gone, but the market, there's still room to go up. And in virtually any place in the United States, you should find somewhere near you that's a growth market. And it needs to be reasonably close to you because you will be meeting tenants, you'll be meeting workmen, meeting insurance people. You'll be going to your property just like to drive by and just check it, so you don't want to make it too terribly far away. Now, if you're in a city like Sydney, Hong Kong, British Columbia, Paris, London, New York, San Francisco, Silicon Valley, San Diego, you may have to go elsewhere to do that. There's an awful lot of good brokers around the nation that can help you place some money. They just need to have a certain amount of experience to do it. But this isn't rocket science that we do with you guys over in the Silicon Valley. You work a lot harder than we do, but we just have a knowledge base here. So what you want to do is find something like we're blessed here in Phoenix, in that we still have a long ways to go. I think we still have room to appreciate here. Certainly our rents can come up, and we have reasonable housing. We have rents that will actually, you can buy properties and actually have a nice cash flow to them. And keep in mind that whenever you buy a property, you not only buy the current cash flow, but these cash flows grow, and we get both not only a current consistent income, but we're going to get future growing income. Unlike a bond, if you buy a bond, even if you go and say for today for 3%, which would be really good, it's only going to pay you 3%. Today we can do much better than that, and of course we typically get in a decent economy 3 to 5% increase in our rents. So we're consistently growing these. So here in Phoenix, we're really blessed with the fact that we have growth areas. Forbes named us last year as the number 2 growth market in the nation, expecting us to grow about 17% for the next decade. So that puts us smack dab in the middle of a growth. So here's what we would recommend, is that if you have a good-sized stock portfolio, if you have $2 million or more, we have all kinds of good commercial properties that you can get. We have things that you can buy, like a Walgreens, a CVS, a McDonald's. You can buy a Jack in the Box. You can buy a building that houses Chase Bank or a Fortune 500 company. We can go and get all kinds of good retail that have strong leases on them, and they're going to typically give you an easy 5%. That's going to be growing again, 3% probably. And some of them have much longer leases, 5 years, 7 years, 10 years. Some of the Chase banks, they have 15-year mortgages, or not mortgages, leases on them. So they're going to be with you a really long time. These are safe, consistent investments. Now, A lot of you won't have $2 million. If you have less than that, what I would recommend is that we go out and look at properties on a single family. And I'm going to concentrate on single family today because they're so easy. They're so conservative. They cash flow. They're safe. Everyone understands them. It's just a little bit of an art form to find a really good one that is going to work well for you. Now, I can walk into a property in one of our universal homes, and I know within 5 minutes of walking into the property that this is going to be a good rental or it's not going to be a good rental. For you, what I would suggest you do, I want you to look at 100 of them. Go look at everything. Get really familiar with areas. Now, what's going to be a good universal rental home? Well, you need to find an area in town that 60 to 70% of the tenants are going to look for as their rent. Now, here in Phoenix, that price range is, about $1,100 to $1,300. That's the meat and potato. That gets you a 3-bedroom, 2-bath, 2-car garage, single-family home in a nice neighborhood. And this is going to be different around. If you're in New York City, no such thing. However, out just in the outskirts, maybe on Long Island, maybe in New Jersey, you're going to find places that are going to give this. You're going to find whatever that normal, customary rent is, and you're going to look for that home, and you're going to make sure that you have enough after expenses and all costs that you have a cash flow. And if that works, then you need to consistently look, and if it consistently works, then that becomes a universal homes. There's going to be one in everyone's neighborhood. You're going to find somewhere within 20 minutes to 40 minutes of your home, you're going to find some place that you're going to be able to buy these properties and get a cash flow. Now, here in my business, we've been doing this for a really long time. We have a lot of properties under management, and we have at least 10 properties that we have for universe of properties for ourselves. So now here in Phoenix, what we're looking at is our demographics. Now, most of the properties we have are sold are rented to mom, dad, and a couple of kids. That typically means a 3 or 4 bedroom home. Maybe it's 15, 16, 1700 square feet. It has a 2-car garage. It's going to have a nice yard, and we're going to make it clean and safe and as much as home as we possibly can, because we want that tenant to stay for as long as we possibly can. Now, we're going to exclude a couple of properties. We're not going to buy anything that backs into commercial or industrial. So if it backs into a Walmart's, a loading dock, we're not interested. If it's on a main street, we're not interested. If it's on a feeder street and there's a fairly good car count, we're not interested. We're going to look at these properties that you're going to want. It's be something that you'd like to own, because I'd like you to buy 1, maybe 2 properties a year for yourself. So that gives you plenty of time to be judicious and take a look and search for the property, because when we buy them, unless there's a really compelling reason to sell, we keep these properties for a really, really long time. If it's a cash flow, we want that. We're like farmers. Sometimes we have a bumper crop, a great crop. Sometimes we have a lean crop. But we own these properties. We always have a crop. And that's what we're looking for. We're looking to put down something that's just going to constantly give us an income. No matter what happens in the economy, we're going to want to do that. So a couple things that we look for. We want to make sure that we're in if we have obviously looking for families. We're looking for a 3 or 4 bedroom home. We're looking for families. They generally are pretty concerned about school districts. So we want to be one that has a reasonable school district. Virtually everybody we work with goes to work. So there needs to be transportation, sometimes a bus line, but we generally try to be within 5 or 10 minutes of a good feeder street. Or here in Phoenix, we have a really wonderful freeway transportation system. So we'd like to be within 5-10 minutes of the freeway, so they can get everywhere in town. And we're going to want you to take that. Say you had $1 million. The typical purchase price in Phoenix here for a good rental property is going to cash flow for us is $180,000 to about $220,000. So for $1 million, you can buy at least 5, maybe 6 of these properties. Now, it takes us a while to place that money, because you just can't go out and say, oh yeah, this house is going to work, because they don't all work. If you have a neighborhood that runs between $180,000 and $220,000, I'm going to tell you where we're going to want to buy. We're going to want to buy down there near that $180,000 range, so that if there's anything that needs to be fixed, we can fix it and get some forced appreciation. Now, if the grass is 3 feet tall in the backyard, if there's holes punched in the walls, if the carpet is all ripped and stained, if there's mold growing in one of the bathrooms, that house is perfect for us, because we'll just go in there and just redo it. It's not unusual for us to put $2,500. We just budget that in because we're going to want to standardize the paint, we're going to want to standardize the flooring, we're going to standardize the window treatments. So we're going to do a lot of these things anyway, and we're going to go in and fix anything that needs to be wrong. If there's roofing problems, we're going to fix everything. We want that house to be clean and safe and home. So we do all those things and get it in really good shape. It's all painted, it's cleaned, it's ready for occupancy before we even show the property. But let's just talk about buying one of these properties at the low end of the range. So just last month for one of my investors, we bought a really, really good property that just kind of surprised us. It popped on the market and we stamped it up right away. It was pretty inexpensive. It was $160,000. It appraised for $168,000. And it needed a little bit of work, but I think it's probably going to be worth about $180,000 by the time it's finished. So if we paid $160,000, we put about $6,000 into it. So maybe we've got, by closing costs, we got $170,000. It's worth $180,000. We put maybe $40,000 onto it. Gosh, we've made 10 on top of 40. That's 22%, 25% just on appreciation. So we like that. So we want to buy the ugly duckling. We want to buy the worst house in the best neighborhood within our universe of homes now, because these things need the cash flow. So let me just check my notes. I think we have a couple other things here for you. We'd also like you to go ahead. Yes, I mentioned this, is that if you have $1 million, you probably want to leverage some of that. So if you bought $1 million, you could pay cash on a lot of these properties, but you may want to put a mortgage on some of them. Now, we can get phenomenal money today. You can get money 4.5%, under 5% for sure. Remember, you're an investor, so you get dinged a little bit on interest rates. You don't get as good as everyone else. But we have really, really good rates. Now, these are historical rates. These are historically low rates. So if they're historically low, the odds of them going up are pretty strong. So we'd like to buy a 30-year mortgage that's 4.5%, 5%. Still cash flowing. Maybe we put 65 to 75%, could go up to 80% leverage on a property. And once you start putting a mortgage on, you get an internal component because we have a declining balance. We have a equity buildup that's just forced into a property. So let's say we put 20% down on a property, and over 30 years, what happens? That loan gets paid off by the tenant. So you have a 400% return, and that's because you have 20%, it's leveraged 4 to 1. You're going to have someone come in and pay that other portion off just over 30 years' time. You just know that's going to happen. Nothing else ever happens. You're going to get the mortgage paid off. And of course, if you have children, let me tell you, I look back and go, where did the time go? So 10, 15, 20 years can go, and we buy a property. We pretty well want these properties to last for a really long time. I mean, if the property's cash flowing, if it's in a good neighborhood, if it's renting well and it's structurally good, and there's no really compelling reason to sell, then why would we sell? We buy these things and we keep them forever, as long as we possibly can. We buy really, really, really good properties so that you can will them to your kids. You can make a legacy. You can move it to your kids, to your grandkids, to your great-grandkids. You should be able to build a money machine that's going to last for generations. That's what we're talking about. So let me just make sure I have everything done here. The goal of the money machine is to make an investment that exceeds your wages or your salary or your business income. We want to try and get you to the point where you can retire really any time. And retire is kind of a funny word. It doesn't mean that you have to just sit home and watch TV. It means that you don't have to work, which sometimes makes your work so much easier. You can volunteer, you can travel, you can do those things that you want to do but don't necessarily pay anything. You can become an artist, you can become a writer, you can become a photographer. You can do all those things that really make you feel good because you're going to create a money machine. Money machine is going to pay all your bills. So, I'm going to leave you with this, is that talk to your advisor, see what your exit strategy might be for anything that you might have in the stock and bond market right now, and take some of that money off the table and talk to a competent broker, someone that you can trust, and tell them that you're looking to make some kind of a money machine and get some thoughts. You're always welcome to call me here. I'm a full-time broker. You guys call me all the time. You're welcome to call. So my very best to you. Bye-bye now.